Welcome, Marty. Heavy is the head that wears the crown.
Talk to me nice. What do you guys got? What's going on?
Sent Tolga an invite. He'll be joining us probably in just a few moments. I figure we'll give it another maybe 2 minutes, let some people trail in, and then we'll get things kicked off.
Yeah, I actually joined the Deribit Chinese spaces. I don't speak Chinese, right? Of course not. But, I just listened. Maybe there's a few minutes of English for some alpha. And they actually just played like elevator music for the first few minutes.
There's a setting now on the spaces where you can choose a music to play, and it will play until you start talking.
New bird app things. Yeah, that's what it was then.
All right, Tolga will probably be back in just a moment, but let's get things. Oh, here he is. But we'll get things kicked off. Thank you, everyone, for joining. We'll be doing these bi-weekly, having kind of a options talk roundtable in collaboration with Marty, Russia BTC. I've invited up one of our big brains involved in the research at Premia, Tolga, who will also be chatting with us. Marty, how goes it, man? How's your week?
Everything's good. Just had a couple calls with you guys today, and then we're hosting, I think, 10 people starting tomorrow for about 7 days. So that's going to be a mission for sure. It's carnival out in Rio, so it's full on party mode. Beers at 7 in the morning type party.
Praying for you, praying for your survival.
And my liver too.
Oh, Tolga, welcome.
All right, the boomer made it.
How are the bonds? How are the bond market?
Sorry, having some tech issues over on this side.
No, you're good.
I'm like, why can't I access the spaces? And Marty's like, dude, it's mobile only. I'm like, fuck, okay.
I did the same
Yeah,
thing. I always do the same thing.
I joined from desktop just to be a part of the crew and then host from the Premium account.
I joined from the Saga phone. No, just kidding. Just kidding.
Let's get into things a bit. Marty, give us a little bit of background on yourself. What do you do right now? How are you? How have you kind of gotten your feet wet in the crypto and option space? Why does Marty have a crown on?
Marty likes wearing crowns. I think before I was like an old Renaissance painter, a little like 1700s type painting, super old school, super nice. Now I wear the crown, little youngin. It's nice. Before now we mostly sell vol, right? So before options and trading vol, I actually was like an art school student that just liked to smoke weed basically and not go to class. And then I found out the Bitcoin and my friends were using it for other activities than what we want to use it for, and that got me into crypto as a whole. And at that point, you couldn't really trade it. There was no derivatives, right? You could just hold spot. So my first 10x was, or my first like big trade was like 100 to $1,000 Bitcoin, and then there was nothing to do for a few years, and then you started to get BitMEX futures, so I learned futures, and then again you had the crazy retail pump up to 20K in 2016 or 17, and then after 2017 there was nothing to do, and then I think Deribit came along in 20, don't quote me, 2017, 2018, and I really learned from futures into options during that time, but for sure don't have the Yale, Harvard, Ivy League selling vol background. And it just rolled into managing my own money, then managing friends and family money, and then managing outside money. And over the years that just grew and grew. And now we run a strictly selling vol fund. For a few years now, we've ran through a few funds. FTX was a debacle for us for sure. We had to close out that fund. It was still up. It wasn't out of money. It was just not the right time. Needed a new structure. Couldn't be in the U.S. anymore. Had to close shop and reopen outside of the U.S. because there's no derivatives essentially. And now we're back to selling vol, selling the Moon Boy calls and the Doomsday puts. That's what we specialize in.
Love to hear it. Uh, let's touch on that a bit. You said that now you're out of the States because derivatives aren't allowed in there. As you know, Premia isn't offered in the United States. How does that kind of affect your strategies and what you were doing? Uh, do you see like that the United States is missing out on, or that there's a ton of volume that's missing from the United States that would uh, be coming to options, and you'd be taking advantage of this capital, or do you see it as moot and nobody really cares because they're all moving out of the U.S. anyway?
Yeah, I mean, you have most of the bigger institutional funds, the biggest, are based out of the US, right? Not just for crypto, but for TradFi are based in the US. And you're really not seeing the adoption that you would want to see. The US, as I was growing up, was always, I'm from Silicon Valley essentially, right? And it was always innovation. We bet on innovation. We bet on the best tech. We throw the most money, and it's all in one day at a time. And now with this crypto, it's really unfortunate that the U.S. is now going to miss out on this. I don't know if it's the next craze, the next run, the next financial future. I have a lot of views on if everybody needs decentralization. I think if you have a Chase Bank on every single corner of your major city, you probably don't need decentralization. Whereas if you're in second and third world countries with high inflation, you're better off just holding USDC in a wallet outside of, the banking system. You have to think like Argentina had a print of like 98 or 99% of inflation year over year. 1 year of holding money in your bank, you're absolutely wrecked. What are you supposed to do? And then look at countries like Venezuela and Zimbabwe. Yeah, I think the U.S. is just really missing out. And you have a lot of these bond trader boomers, little Charlie Mungers running around, just influencing too much. And I don't think like Bitcoin is the reserve asset of the world, right? It's just another finance tool. It's just another instrument that people use to transfer money. I don't know if you've ever tried to send a wire. It's like $30 sending and receiving, plus maybe it takes 10 days internationally, where it's like you could send any crypto at that point and it would be faster than that. So just as a whole, I think the US is really missing out on the next leg of innovation. I think blockchain is a big thing that they are actually accepting. Companies, shipping companies, freight companies, banks are all using blockchain, but they're not the SEC is not in for any sort of, I guess the CFTC too, not in for any sort of speculation on these financial tools, no speculation on these assets. There's no margin, there's no leverage, there's no options, there's no derivatives. We don't even have a spot ETF where countries like Canada even have a spot ETF.
It's interesting to now see, especially today with the Coinbase announcement and rumors that they're going to deploy their own chain. I'm wondering whether they're pretty much giving a middle finger to the U.S. and U.S. regulatory bodies in doing so, or if there's something that we don't know at play where this is now Fed chain and meets kind of all these regulations, and it leads as kind of a bridge or path for the U.S. to have an L1 where products like this are available.
Yeah, I think the US is working on something. I think it's literally called like Fedcoin or something. That's like the name of the project, right?
I've seen Fedcoin. I think that was
Yeah.
at the Federal Reserve that was talking about that.
Yeah. Well, they're going to be the ones that issue it, right? So, yeah, the whole thing with the US is it's like 300 plus million people, and there's, I guess, 8 billion roughly now in the world. And it goes back to like not everybody needs decentralization, right? Second and third world countries will adopt decentralization and crypto and uh, Fed coins essentially first. Like right now, Brazil's working on their regulation for crypto. They passed some laws, and now there's like 180 days until the laws come into play. Then every exchange has 180 days to follow. But it doesn't stop innovation, right? It just gives a simple structure that people need to follow so there's not people getting scammed. Because in
Yeah.
Brazil specifically, it's like, oh, join my fund, quote fund. It's not even a fund. You don't even have a company. And, people just throw money, right? The minimum wage here is like $200 a month. So imagine somebody's like, oh, we'll make you 100% a year. Oh, take my money, right? Do
Yeah,
something
it's
with it.
more about like protection in place for higher yield investments and multi-level marketing.
Yeah, and pyramid schemes and multi-level marketing, right? So I think places like Brazil, Singapore, Palau are all on like the forefront of crypto. And if they leave US in the dust, then so be it, right? It's only like 300 million people, right? And I know the capital markets are bigger in the US, the world reserve currency, US, blah, blah, blah. And maybe in our lifetime that changes, right? But I don't necessarily see it a bad thing if you leave the US out of this innovation pump.
Do you guys really think that they're going to leave the U.S. out, though?
No, you guys are going to leave yourselves out.
Right. Well, I think what's happening is there's a surgical process of control that they're trying to instantiate, right? So, like Coinbase, for instance, like they just announced that they're doing euro stables, right? But if you read the fine print, you see like on the euro stables that they're uh, housed within regulated U.S. entities. And so you kind of get the sense that, okay, well, I think what they're trying to do is get their hand and control things, but have some sort of bottleneck or funnel in which they can sort of have one sweeping process to be able to uh,
For all the
integrate into
funds
the system.
in
Like
and out.
yeah, I just don't. They're never going to chase every single little protocol. Try to chase every little nuance in the system. It's just not worth their time unless it's big enough, right? And so, for the most part, being able to regulate every section of DeFi just doesn't seem practical or possible. But if you do control one entity, right? Like call it, you have the U.S. has some sort of ability to control like USDC, for example. It gives them sort of this gateway, right? This on ramp into the entire system in which they can essentially blacklist people. We've seen it, right? And I think what they'll do is continue to find ways to find entry points in which they can get the most control with the least amount of integration. But in retrospect, they're then still just going to be integrated. But it becomes like a power grab in a lot of ways.
Yeah, but okay, going back on that, that's totally fine. I think that's okay as long as they're not like blacklisting everybody and anything, right? As long as there's not like a social credit system in play and they still let people have a free market and trade, and even if it's called Fedcoin and that's what you use, sure. It's just like the OFAC system, right? Like, oh, you can't get a bank account if you're a really bad person, essentially. But what do you think about the US not offering derivatives to individuals, like, or even funds? So you're a fund and you hold spot and you want to hedge out the exposure. Where do you go?
But that's been the struggle in even traditional finance. So uh, the amount of vehicles you have access to in the U.S. for traditional finance is very limited, right? You can't access hedge funds. You have to be an accredited investor to do a lot of um, venture capital investing, right? So there is still like a massive amount of investment opportunities that are still restricted within the U.S. in mature markets. So I don't know how that you know, we like to think like we have like this free system currently in traditional finance, but we still don't. Even with we had touched on talking about like portfolio margin and this ability to well, you got to be cleared to do this, right? You can't just go onto an exchange and just recklessly use margin. There's just generally like a due diligence process, right, of information they need from you that you have to fill out. So um, there's still restrictions that exist. And ultimately, the one nice thing about DeFi is, right, if you really want to access something, it's pretty easy to. It's not too hard to be able to integrate into a DeFi platform, even if their front end is blocking US users. And that's true for every protocol, right? And then I think even Uniswap, right? I believe they block front end users
Yeah.
in the US, but anyone can access their pools. If you know a little bit of JavaScript or Python, uh, you have full
If you know
ability
how
to
to
access.
traverse
So,
Etherscan, you
yeah,
Yeah, but that
yeah.
back to your point, it's just a capital requirement essentially, right? Like, I think they call it a sophisticated investor now, right? It's or accredited, right? It's $1 million liquid or $1 million in property, not including your first house. So, and I think futures you need 25K to start trading futures on something like Thinkorswim. That just becomes like a capital requirement, right? You probably shouldn't be trading futures and options with under 25K, but that's an argument for another day, right? Um,
It's part control, like part I'm looking out for you,
yeah,
like,
yeah, but
right?
just for the U.S., oh, they went after that Russia, just like they're overstepping. I feel a little like the little Russian exchange. They're like, oh, you laundered money and you're partying in Miami, so we're gonna arrest you in Miami. That's a little rough for me. The Avi guy, oh, he manipulated markets and he lives in Puerto Rico. Uh, I think you go back to the code as law, and I hope he sees his day in court eventually. You just have the SEC really for me, overstepping what they said they were going to do, and if they really wanted to just make like clear-cut rules for everyone to follow and everybody shuts the fuck up, essentially, is you need to edit the securities law from 1940s, right? You need to bring that up into 2023 and beyond. And you can't just sit there and arrest people and give fines and make people felons. Even if they're not even American, right? They just arrest you for something that they aren't partaking in terms of their job, right? They're not giving clearance or they're not giving guidance. And I think if you gave that guidance, you would stop most of this nonsense. Like, oh, you can't do this. Okay. So if you do this, then you get in trouble. Okay. That makes sense. But for right now, it's just such a gray area. And yeah, DeFi is like the last straw that
Well,
they're going after.
yeah. Speaking of that gray area, though, like how do you see that even resolving to any clarity? Like my belief is that there's no such thing as clarity. Like it will never. It's like this theoretical thing that's never going to exist because the space is evolving 10 times faster than regulation can even catch up. So I'm not sure what we're waiting for uh, from that side. Um, I just don't ever see it. Maybe,
Nah, yeah,
especially technology just moves really fast, and blockchain's probably, and crypto in general and DeFi, it's probably moving 10 times faster than the nearest industry, right? In terms of like innovation
for
and
sure,
just like
for sure.
changing of
Yeah,
like the structure and the marketplace. So you're literally, the Fed's literally chasing us, right? Or SEC, CFTC, every regulatory body known, right? Like they can't even take care of like their own markets, right? So
yeah. Where
I'm
go ahead.
not hopeful of clarity
Yeah,
with
no,
the
my
Fed.
only thing is no, I cut you off, right? But my only thing is like, okay, Coinbase, let's just start there, right? They're a regulated US entity, they're a publicly traded exchange. You can buy the stock, you can be a shareholder, perfect. And then there's only like a handful of crypto you can trade, and there's no derivatives. There's not even an option for you to have $1 million, 25K plus a test, whatever you want to call it. And okay, now you can have options and derivatives. Maybe not perps 100x, right? But you can have some sort of derivative. Right now, I think they do just like FTX US and Kraken, they do margin, just like regular stock margin. So I think you can like whatever 3, 4, I don't know what it is, 2, 4x your cash, but only on the long side, right? And if the SEC was like, okay, Coinbase, if you had $1 million, you could do some options, you could hedge out your whole portfolio, but these are the rules you need to follow. Like, I think I would be okay with that because it's still the same old rule of capital requirement plus a little bullshit test or whatever. And then yeah, maybe it doesn't include DeFi, or maybe it doesn't include, I don't know, GMX 100x trades or BitMEX. Okay, that's totally fine. That can operate outside of the US and cater to a different kind of clientele. But I think just saying like, oh, no perps and no nothing, all these people are going offshore, all these people are going DeFi, all these people are using VPN. Like, are you really stopping people from trading? No, you're just stopping them from accessing the homepage.
Well, in some ways, are you referring to like sort of like a KYC problem? Because like not from a money laundering standpoint, but from like just literally, how do you even impose restrictions and ensure that the person understands what they're doing, and how do you tag that to an account,
On
right? Like,
DeFi or on a Coinbase?
yeah, no, in DeFi, like obviously in Coinbase, they know your identity, they know your, they have full record of you,
Yeah,
right?
yeah.
And so it's a lot harder for you to just share your account with
I can
others. It's
touch on this a bit. I mean,
yeah.
I think the same reasons that I think even more so with DeFi than in TradFi, would you not want to share your quote unquote account information? Because in DeFi, that's sharing your private key. So when it comes to verifying, knowledge of someone, me and DK have done like quite a bit of research on this recently, just what type of on-chain verification systems there are, and there are ways to do this, like by doing a pseudo on-chain off-chain system where you're taking a financial literacy test, and then through passing that, a soul-bound NFT is minted to your address, and I think that bond from the address that you're using, that you're cashing money out to, from your main exchange or your off ramp, and the protocol in which you've been approved is a much stronger identity link than just an account on Deribit or something, or on Robinhood, where I could sit on a computer, at a coffee shop with a friend and say, hey, help me out with this test. But I'm never going to give my friend my private key, or 99.99% chance I'm never going to give a friend a private key to go and do something for me.
Yeah, I think you're just you have this DeFi versus CeFi thing. I think on CeFi you should have a requirement and some. Of course, they know everything about you, your address, where you log in from, all your full KYC. I think there still should be some literary test or some capital requirement, and you should be able to hedge out your portfolio, right? Just doesn't make sense that there's not this product.
Yeah, but curious where you guys think then, like, DeFi hangs its hat on the fact that you need to do your own research. This is the Wild West, right? You
Yeah,
need to understand what you're doing. If you want control of your funds and you don't want anyone doing anything for you, well, then you better understand what you're doing. It's that simple. You can't just you go to a bank and you give them your money and you trust that they're doing things because there's regulations in place to trust them. You don't have to do any verification. You don't have to check anything.
You
But
go
if you're
back to
playing
this
the
code is
DeFi,
law, right? Code is law. And then you
yeah,
see people
well
like
then
Avi who
knowledge is,
manipulate it, right?
yeah,
And then they get in trouble for manipulating the code that we all believe is law. And then you have the SEC who steps in and is like, that's not the law. So all I'm saying is like, just
yeah.
make some simple rules. It's such a gray area. It's still Wild West. There's still other ways to trade. I left that burger land for a reason. I can't stand all these weird laws and regulations that nobody gives clarity to, and maybe there isn't clarity, but you can say this is wrong and you can't do this. Okay, then we can do this.
It's kind of a good bridge into the market, because over the last few months we've seen a huge shift in volatility as we've gone from markets pulling back from, starting with the Luna crash to the FT collapse, 3AC tied in there, and how regulation kind of put fear into the market, not only from things going on with FTX, but some of the stablecoin stuff that's come up. And if we look at that, the price action and volatility versus the latest, where everyone is at least it seems for the most part risk on. Um, what are your thoughts on that, Marty?
Oh, good transition. Good transition. I think that it's a little weird, right? I mean, we saw like uh, a liquidity crisis in November 20 whatever, right? We saw the liquidity crisis, and that pushed us lower, and then everything was looking fine, right? We had the summer where we hit whatever 30K or whatever it was, and then we recovered from there. Everything was looking okay. Everything was actually looking on the up and up in the macro. If you took out FTX crash, we'd probably be at the same price or higher without that super deep flush to 16K. FTX really soured the market, especially in the institutional side. Like right now, for us, we just launched or recently launched a new fund, and before you could get away with going to like a major bank, a commercial bank, and getting an account, right? Just a super basic account, right? As long as you're not moving billions of dollars every single day, and just in and out and redeeming clients every quarter. Like, yeah, it was pretty okay. And now there's only a handful of banks that will even work with institutional side. So that really sucks, right? And with FTX, you had Bitcoin pushing all time low volatility. And even my friend was like, "Oh, where's volatility going next?" I forgot what number it was, right? And he's like, "Where's it going next?" I'm like, "Just lower." It's just going to keep grinding down until there's some shift in macro, because Bitcoin just follows USD liquidity as of now. We're pretty much correlated to that, correlated to all markets. And I'm not sure if we ever decouple, right? But that's a conversation for later. And now you're seeing just like with everything, every tech stock is up. Go look at fucking Facebook. Go look at Tesla. Go look at ARK. I think ARK is the leader from the beginning of the year. Like, that's insane, right? People are just throwing it like Tom Brady, Hail Mary all the way, risk on. And there's still a lot of sideline capital which has yet to join. And if they join, then the pain trade is up, as long as the Fed and Powell, which I think has capitulated, kind of 90% capitulated. As long as there's not any more hikes forecasted into the end of the year that we already don't know, then the pain trade is up.
Yeah, it's like me that our market participants, like the people who are pretty ears to the ground and always doing things in crypto, that they don't fear us going too much lower. They all think the bottom's in and have pretty much gone back into uh, full degen mode. Everyone's aping alts again. Everyone's checking out the new hot L1 that comes up. There doesn't seem to be a lot of fear in that aspect. But inflow wise, we don't see a lot of retail inflow coming into the market. Do you see the same in like the options market, or are you seeing differently?
In the options market, options are still like a small part of crypto, right? Options rule the markets in TradFi, right? They create the real support and resistance that that most people draw lines to. But in crypto, it's still a small market. It's not even close to perps in terms of notional value. But I think you're seeing, like right now, you're seeing QCP and Genesis trading compete for gold stars on Paradigm, like who can trade the most volume. And that's interesting because they're selling like random shit that you would never sell, right? They're just trying to go for the most volume. And however they hedge that out on the back end, that's their issue. But I think it's just funny to see these two compete. Right now I'm getting a lot of more like DMs and messages like, "Oh, where do I go for options? What do I think about options?" There's more spaces, there's more activity. It was looking pretty grim there right after FTX, and nobody wanted to trade Jack, right? But specifically in the options market, I don't know if it's full retail degen back, but what I'm seeing is more ProTail, this pro retail trader that's coming out. They have enough money to and enough understanding not to just directionally ape, but they're not big enough to be institutional. And maybe they're, old TradFi guys or old fun guys, or maybe they're just like me, just normies that figured it out. And now the next phase seems to be people that actually want to learn in options. Like before, I don't know, 100 people would message me and I'd tell them to go read this, and one person would get back to me with they actually read the book or something or the article. And now it's more than one, right? So I feel like there's more people that want to learn options, and I hope that they continue to learn options. But in terms of flows, I think flows are still institutional right now, except like these degen calls, like 32K calls and 50K calls and things like that, just outright calls.
Uh, Moving into flows, how do you kind of see the ETH and BTC option flows right now going into the end of this month and into March?
Right now, we're running into February expiry, which is pretty boring, right? The bigger one's going to be the end of March, which is Q1 expiry. I think you're going to see a lot of people roll some options there, and right now you're seeing dealers mostly sell upside, which they really let this last little pump happen. That within the last 2 weeks, they were really selling like 20 in Bitcoin specifically 23K calls all the way up to 30K calls, just in size. Dealers are just selling in straight size. Um, Now I hope they roll that to sell a little more upside. So I don't know. I'm not sure what the price target is, right? We usually trade the option, not the underlying. Like, who cares what the price of the underlying is? It's like, is this option for us? It's more like, is this option mispriced, essentially, right? And across different venues, especially in crypto and in specifically DeFi, you can find a lot of mispriced options. But for me, I hope that this little rally continues and dealers still pick up selling the upside instead of just unwinding everything and nuking us back to zero.
We can pray. With the I guess disparity of kind of liquidity and pricing that happens across DeFi option protocols. Why don't you think that more funds are taking advantage of those price disparities? Is it, you think, the risk appetite, or approval to not dip their toes as much into DeFi?
Yeah, it's a little bit of both. So especially in DeFi is like how do you custody hot wallets is becoming a real big issue. And essentially if you're managing OPM, other people's money, my favorite kind of money, why are you going to take OPM and risk it on a protocol that might go bust? Even you have CFI, right? You had FTX go bust, but imagine you were, I don't know, market making on Mango, or you were doing stuff on Mango, and then you just get absolutely licked, absolutely wrecked. Every day, every other week, every month, especially after FTX, there was like a new DeFi hack. So I think in the institutional space, you're not really seeing safety, right? There's no rules, there's no laws, kind of what we talked about earlier. Crypto's still the Wild West, as Tolga said, and code is law in that space, right? So if you're not ready to protect capital, and if you can't hedge out that exposure or get an insurance policy or something, then why are you going to risk your client's money when you can just go trade on Deribit, especially on a new protocol? Let's say you have a lot of players like Jump will go market make for you. Other big players will go market for you, but it's a different game of taking risk on that platform.
I actually have a question for you
Yeah.
about where you think actual yields are in the DeFi space, and if you think that they're risk adjusted appropriately, or if you think that just interest rates have gone up so much that the yield in DeFi versus real rates in cash make it such that it's not worth the risk. It's not as enticing anymore.
Yeah.
Do you
Yeah.
see that?
Yeah, like a real world example, right? What is it? Today's Wednesday, so Monday I got an email from a bank that I use, and they're now offering 3.75% APY on cash. So you're like, okay, let's just start there, right? Okay, there's that. Money isn't free anymore, right? Interest rates have rose, so it's not free. We had zero interest rates for 10 plus years, and you could borrow billions for not free, right? But basically free. And if you're a fund, specifically a TradFi fund, why are you going to come into crypto? Why are you going to take that risk where there's still this regulatory gray area when you can go buy boomer bonds or even just hold cash in a bank and make 3.75%? Why are you going to go stake in a pool for less? Sometimes I see DeFi pools less than that. Of course, there's a much higher than that, right? But why are you going to take that risk, especially with other people's money? It's just not fair to the investors, and if you get screwed, then yeah, you're done, right?
Yeah, I think the blue chip yields are like extremely competitive. Like blue chip DeFi yields
Yeah,
are extremely competitive to the point at which, um, from a TradFi perspective, you're putting a premium that doesn't exist there, right? Whereas if you're probably, DeFi native, you understand the blue chip nature of, some of these vaults and yield products. So for you, that's fine. But it just seems like it's hard to get someone to onboard from, say, a traditional finance perspective unless there's incentive, right? The proper incentive to make that commitment. It seems like it's a little tough. It's a tough lift right now to get that to get people to for fresh money, new money to come into DeFi, right? I mean, every boom sort of involves some sort of fresh money, because otherwise it's just gearing of the same money, and so it's just ramp up liquidation, but you're going horizontal until there's actually new money coming in.
yeah, it's just a credit cycle essentially, right? I just pulled
Yeah,
up Avi, right? DAI is 1.9%. USDT is 2.62%. So why? The
that's
question is
crazy low.
why, right?
That's
Yeah,
insane.
that's yeah,
That I mean,
that's
that's
insane.
I would rather just have my money in a treasury that's getting a
Yeah,
higher yield, right?
yeah.
It's
The answer is just why, right? And why are you going to take
yeah.
that risk? And why are you going to manage hot wallets? And who's going to custodian that for you? And who's going to manage that? Well, especially if you're a U.S. based fund, um, it's really hard to get into the space, right? Back to the first part of this space, right? That's really hard to get into if you're just a US based fund. If you're Asia or BVI or Cayman or something like that, sure, you can dabble in these markets, but it's like, oh, your client is whatever, $1 billion client, and you're like, oh, I can get 2% That's it. They're like, hold on. I can go buy treasuries risk free for, a lot more than that. It just doesn't make any sense right now. I think you have something interesting though in ETH, and I think you're going to see a lot of new products built on ETH once you can withdraw. Because if you're still getting 5-6% a year and you're denominated in ETH, then you have a whole new finance market based on that yield, right? It's hard when people still denominate in USD, but if the fund or if the person denominates in ETH and they can go get 5-6% in ETH, and you're a new fund trying to raise money from new investors and you make less than that, then what's the point? If you're a crypto ETH denominated fund, right? So I think you're going to see a lot of products built off that ETH yield once you can withdraw and deposit, and we'll see how seamless that is, right? I don't know if it's going to be instantly or if it's going to be an hour, right?
Yeah, we had appetite maybe 6 months back or so ago from a fund for stablecoin options, and at the time we looked at what are lending rates and what are bond rates and like what is the appetite for that kind of risk, and the thing was we couldn't meet a yield, or they couldn't guarantee a minimum yield that would be worth it. Why take the risk? So that was kind of put on pause for the time being. Will probably be introduced sometime in the future. There'll be appetite for it, but yeah, I mean, it's hard to compete sometimes with traditional rates.
And a few $1,000s or a few $100,000 is different than like $1 billion, right? Like, how are we going to get BlackRock to stop buying city blocks in Detroit, and making hand over fist money, then coming to DeFi? They're like, why? I was watching it was a clip the other day, but ended up watching the whole video. I forgot who the guy was, and I'm horrible with names, right? And the question was like, oh, do you think Bitcoin will be like above X price by this time? And he's like, who cares? He's like, it doesn't matter to us, right? We run, it's like a $700 billion fund. He's like, who cares, right? What does it matter to us, right? So we still live in this echo bubble, this echo chamber of crypto native people, or screw the system people, or people that just want access to simple finance tools. And I hope that that grows and grows. And I think options is a super underrated space right now in this next phase. And as long as the price goes up, then people will keep coming back.
Would you say from like a transitional phase standpoint that the sustainability of maintaining a 70 vol, 100 vol product isn't realistic, and it's very tough to build an ecosystem on that? Like, could you see ETH being a 20 vol product in the future?
Could you see ETH as a 20 vol product? Like, essentially, does ETH trade at a 20% annualized rate of vol? No, right? The answer is no. Essentially, no. If it was to be that, I think you wouldn't be having this conversation, right? Like I always say to people, they're like, "Oh, what do you like about crypto? Like, oh, how much money do you make? Blah blah blah." It's not about the money, right? But I like to not make basis points per trade, right? I don't get out of bed for less than 100% is the joke that I always make. And sometimes it's true, right? Especially in crypto. I don't know, you have coins pumping 40% in an hour, right? That's way more fun than, oh my God, your Tesla went up 1% today. Like, unless you have billions of dollars or tens of millions, hundreds of millions, that's not feasible for the regular person to make any money. I think that's what draws a lot of people to crypto. It's just going to be really interesting to see what products are built on ETH that yield ETH, right? The yield's going to be 6%. So what products are built on top of that generate more than that? And I think over time you're going to see eventually getting closer to that 20% over time. I don't know in what time frame. That's not my game, but over time for sure, it's going to get more and more boring. more and more vanilla.
It seems like there could be other avenues of alpha, though, right? Like, because what you said is from the development standpoint, if the ecosystem develops, the opportunities then become in various components of the market itself, right? And that's kind of that point at which you mentioned where people just start thinking in ETH, right? They're just so integrated into the system that now that's their denominated asset, right? Versus whereas this mentality still is this, what's this worth in dollars, right? And
Sometimes it doesn't matter. Go look at like the NFT pump, like, oh, this Fidenza was 700 ETH. And people didn't give a fuck. They threw that shit. They're like, 700 ETH? Who cares?
assuming it
About the
wasn't,
dollar, they don't
yeah,
care.
assuming it was not. I always wonder with NFTs of how much of that's actually washed. I don't know if there's any research out there that
A
actually.
lot of it's washed.
Yeah, I'm just curious. If, it's probably got to be really difficult to figure that out. But I mean, it seems common knowledge that there's a significant amount of wash trading, and so a lot of those numbers are probably um, maybe not as real as they look on paper.
A lot of them are washed, but a lot of them are real. Because, like, back during that time that you're referencing when Fidenzas were going for 200 plus, when the floor was 200 and something ETH, you had a lot of small funds, quote unquote, popping up of just NFT degens or people that had gotten rich from you know claiming 50 punks in the beginning, or they minted a bunch of Bored Apes, and now they wanted to ape into all the generative stuff. So you had people that were, I was watching, shove hundreds of ETH from Coinbase into a hot wallet, and then on Foundation bidding 50, 75, 100 ETH on circles. So, and they were doing it for a collection, like for a fund that they were trying to start or things like that. So it, whether or not it was smart money is more of the discussion, I think. Like, it was real money, and were they real buys? A lot of them were real buys during that time period. It's just they weren't very they weren't very thesis driven. It was more it was more hype driven.
Yeah, you even had Taiwan Sue with Vincent Van Doe, right? They launched like a 100 million ETH fund, or sorry, $100 million fund, right? So there was just money flying at the time, right? Credit was free. Essentially, you could borrow as much money as you want at a super low rate, and I don't know if they'll ever make their, well, they won't ever make their money back, but any of the other funds that invested in NFTs at that time, I think that there's a space for it, right? As long as there's utility and their community behind it, the price can go infinity essentially. What's the worst that it can go to? Zero, right? But there's always the upward arc of infinity, especially with super strong communities. But a lot of that shit, like the Pixelmon, I don't know, they raised tens of millions of dollars and came out with nothing. Like just shit like that. That was just like so disappointing. Like, oh, you guys had such the opportunity to do anything you wanted, and you guys just blew it on some nonsense, essentially.
Shameless plug, everything on Premia is an NFT. Every position, your option positions, your liquidity positions. So there are NFTs with utility that are being used out there.
Yeah, and I think I go back to like it's going to be interesting to see the products that are built if people start denominating in ETH, and if and when they ever do that, and especially if you denominate um, that your yield is, your risk-free rate essentially in ETH is like 5% by staking it, and it will be really interesting to see it once you can stake and unstake. I don't know if that's going to be instant or 5 minutes or an hour or whatever the time frame is. I think that's maybe there's like a selling pressure at the beginning, but I think over time that will become like a more utilized part of the ecosystem for sure.
We talked about, I was just chatting with you about like the risk adjusted returns and just this incentive model of getting new capital in. So, I guess the first part would be, do you see staking ever changing its yield? Like, I assume it seems like it's likely going to hover around like single digits for the most part of its life, regardless of liquidity elements to it.
Yeah, and you have something weird with ETH, right? Is like, oh, they did this, the staking, and then they did the merge from proof of work to proof of stake, and now you haven't had fees been adjusted, right? So even with the Blur airdrop recently, whatever, the last 2 weeks, you still had $100 gas, right, to claim your Blur. Like, that's so unsustainable in the long run, and you could argue about that. I don't know. All those Bored Ape people are like, it doesn't matter because of blah blah blah. No, nobody's paying $100 gas like in the future, right? Once they figure out gas, and let's say gas gets 10% of what it was, so let's even say it just stays in that $1 to $10 range. Uh, you're never going to see the yield be over 10% for sure. I think the peak of it is now, 5 to 6% before withdrawals, maybe higher. I guess it's like 6, 7, right? 5 to 7.
Seems like it would be in ETH's best interest then to become a low vol product, so then this return from a risk adjusted standpoint becomes um, attractive, right? I mean, it's always about like two numbers. I think a lot of times in DeFi, people get obsessed with the top line number, right? What's this yield? What's the percentage that I'm getting? And they kind of completely lose track of the fact that there's sort of this risk element, right? I guess some people just have such a large risk tolerance that it just doesn't even matter. So any return is good as long as the number is high. But from a risk adjusted standpoint, it seems tricky to be getting a 5% yield on a 70 vol product, right?
Yeah, and does 90% of the people that are even staking even understand what that means, right? You have a super new money type of degen that are just staking or that are, depositing in pools, and I hope that there's some sort of education out there that some people learn, like what's to come, right? Because imagine ETH goes to a 20 vol product, you're not getting 6%. Essentially, right? It's just not feasible. It's just not going to work.
Yeah, it's likely. I mean, the other
Just in
thing
the
to think,
long run, I don't know, 50 years, like, oh, you're still getting 6% on your ETH, and ETH is traded as a forever bond paid in ETH, and ETH is, there's a stock ETF, there's a futures, there's already CME, right? But, there's global futures, there's global markets now based in ETH. Yeah, I don't know. I hope people just make their money and then realize, like, the future isn't ETH, right? The future is other coins and other things. There's other ways to make money besides one chain.
do you think that the word yield is being abused to the point at which everyone feels like this obsession of trying to present a yield number to people? And I've found in practice that these numbers and how they derive them are just completely different from each other and have completely different assumptions, yet without regulation, you essentially can say whatever you want.
Of course.
Um,
Yeah. No, like the today, SYN USDC on sushi popped to 340% APY. It's like, how is that sustainable? Essentially, like, yeah, yield abused for sure. And what the meaning of yield is, I think, differs from each individual person. But I think it's going to be really interesting if the US comes out with some sort of regulation that just either squashes this or allows this. Right now, pools are in, I think you said this, right? The pools are in like a gray area, right? US clients can still participate in pools. But if that changes, um, the only people with money from there is with, to make up the differences, the Eurozone and Asia, and then you have South America and Brazil, South America and Africa after that. Specifically Brazil, right? We're 230 million people, right? We do a lot of this as up only, right? We do a lot of this DeFi, especially with 10, 20% inflation. But who's going to fill that void if U.S. clients aren't able to invest in the pools and the funds are able to invest in pools? Does that just push everybody offshore, like kind of like what we're seeing right now? I don't know. Just a strange time.
What a time to be alive.
What do you think, Tolga? What happens if the Tolga? What do you think? What happens if the U.S. says that U.S. investors can't invest in pools? Who fills the
Well,
void?
yeah. Well, I mean, I see that as the next attack vector. So, like, one thing that I sort of gets my blood pressure going is when we internally talk about yield. I I've just been so geared to a TradFi mentality and such a regulatory based framework that, like, so I ran a fund with a partner of mine for about like 7 years, and we had the NFA come and audit us. They, like, physically, it was just two of us in an office. They had four regulators come and sit in our office all day, and the shit that they, like, ping you on, the way you represent numbers, how you report your monthly returns, it's so highly scrutinized. I don't see how they don't attack the vaults and pools that are promising yields, because it's a complete area of just made up numbers, right? They don't have any risk disclosures, and so if you believe that there is this scenario in which whatever they're doing in traditional finance, they're going to try to map it to DeFi, then that's their attack vector for sure with vaults and pools, is attacking this yield number that seems to just be this made up number that everyone's kind of creates their own way of doing it.
But who fills the void if the U.S. is out? Do all these funds just move offshore, right? I mean, most of these funds in New York are already registered in Cayman, BVI, Dubai, you name it, right? Just offshore in general. Like, who fills that void, and what happens to the ecosystem if that becomes the norm?
That's a good question. I assume the market adapts, right? And so I
Yeah.
think one thing you do see is there's still very healthy amounts of building in the US. So, like, a lot of people have their head down and are writing code, and they're creating products, even though there is this regulatory uncertainty, right? So, like, because you have, like, two sides you can look at this from is, there's the money flows side, right, which kind of ebbs and flows, cyclical, right? Everything we just talked about. And then there's the building side. The building side's a lot more steady, right? It's a lot more consistent. And I think in the long run, if you're ever looking at something that you want to have faith in terms of our system or our ecosystem, you want to check the development side, right? That's usually where everything eventually kind of if there is lack of development, if there's lack of capital being invested in development, then I think I would have some concerns about the US. But it seems like a lot of the capital is funneled in a different manner now in the US, right? And so, like, you see funding for projects creating things that have not 100% regulatory certainty, but people are throwing $10 million at a clip for anyone who wants to just create a protocol. It still seems to be happening, and this is in the U.S. So it's conflicting, right? But I feel like it's a positive underlying movement that should then just mean that it's a matter of time before the U.S. is going to. I don't think the U.S. is going to close their doors, is what I'm trying to say. Is I think eventually they're going to open it, but they're just a little bit guarded at this point.
Yeah, I hope that that's the case, right? Because the U.S. has been the hub of innovation when others haven't. So if they shut their doors now, I don't know if they're missing out on the financial future of humanity or whatever you want to call it. I just think that they're missing out on innovation as a whole, where Silicon Valley, Austin, Texas, Miami, Florida now have become, those last two have now become hubs of innovation, right? So if you see, like, DYDX team getting scolded by the SEC or whoever because they're creating this product because the team is based in whatever, New York and San Francisco, like that's going to suck for the whole DeFi space. And I hope that protocols are ready for that. And I think that they should be prepared for that. And, always have a plan B in terms of what if.
Indeed. That about wraps it up what we had on the agenda. Let's open it up to the listeners. Brown Boy, I know you had your hand up. I'll invite you up first. And then anyone else, feel free to raise your hand. Sent you an invite.
Brown Boy, are you there? I'm sending you an invite. Anyone else have a question? We lost a lot of people when we got canceled.
Yeah.
Hart, you got a question? You're listening in. Hart, you got a question? It's a little late for him. Damn, no questions, just us.
There we go. Can hear you.
Yep, we got
Amazing. First, I want to start off, Marty. Thanks for all the material you shared on options trading. I think I also DM'd you, and you were really helpful on that end. So thanks. Just a quick question. Just your thoughts on how crypto is holding up in comparison to TradFi. Just curious to get your standpoints from the three of you.
Yeah, sure. I think that crypto is following US dollar liquidity. And for now, essentially, we're more correlated to macro and the Fed than ever, right? Bitcoin's always been a follower of USD liquidity, but more recently, we're really affected by, like, who even in your Twitter following, who even knew what FOMC, CPI, FOMC minutes, PCE, all these macro announcements never affected people's triangles and lines that they drew on Twitter for years. And now, you're seeing this macro environment really hammer crypto as a whole, and Bitcoin being the big daddy there.
Got you. Amazing. Yeah, no, I just wanted to know your standpoint because, I think last year whenever Trade kind of sold off this much, crypto was affected way more. But like this time around, it just seems to be holding. So was curious on your perspective of that. Thanks.
Yeah. It's interesting to see that we're above the FTX crash point, right? And I don't think a lot of people even realize, like, we're way above the November crash of FTX. And that really shows a positive recovery in the space and in the price. For now, everybody seems to be pricing in that this is it for rate hikes for the Fed. If there's a surprise rate hike, then everything gets flushed, right? Not just crypto. And yeah, it's just going to be an interesting year for sure. Because even last year, we thought that the euros were going to be freezing. Nobody's going to have any food because Ukraine-Russia conflict. Nobody's going to have any gas to heat their homes. And that's not the case, right? Everybody in the Eurozone, sure, it got more expensive, but all of the deepest, darkest thoughts never really came to reality. When everybody was doomsday posting or news was just maxi doomsday.
Perfect. That's all for me. Thanks, guys.
Yep.
Yep. Thanks, Brown Boy.
Marty, I do have a question for you. How much? So when something like FTX happens, right? We know that there's just a massive amounts of assets that get frozen, right? We saw this with Bitcoin as well during like Mt. Gox days, like in the early time period, right? Everyone's always like, "Oh, the money's finally going to be
Unlocked.
in the marketplace, unlocked, right?"
Yeah,
So
yeah.
how do you feel that the FTX situation has potentially changed like the market player structure, given like that. I don't even know how much money could have possibly been frozen, but it's not small. They had their hands in everything.
Yeah, I really think from there we were like number 10 FTX US market maker right before. I say were because the exchange is closed. Somebody's fucking jackass are like, "Oh, you lost all the money. The fucking exchange closed, dummy." You know? Luckily we got all of the money off in time. Everything was cool there, but in terms of your question, like you just have a really different time, right? Like Mount Gox, there was only Bitcoin essentially, and the price from when Mount Gox got locked up until now, like whenever that unlock happens, that they keep pushing back every 6 months. There's a new update that they keep pushing it back. I think you just see some sell pressure there in terms of like, oh, I bought at, $1,000, and now it's 20,000. Like I just did a 20x. I'm out. So there's obviously natural sell pressure from there. But in terms of money locked up on FTX, I see at the beginning you saw a lot of people selling claims. And even recently, the big one was this week was Kevin from
Galios.
Galoy, right? Galoy, I guess, right? He's it's a mathematician, right? There's some special way to say it. Galoy, I guess. I don't know. I could be totally wrong. And they lost 50%, and now they sold their claim, right? So now you have these like loan shark type people that are buying up claims in the millions of dollars that are going to sit through a bankruptcy that's going to take too long, essentially, right? Enron was 7 years, and that was huge, right? 60 billion. Mount Gox is 10 years counting, right? They haven't even closed out yet. I think that, like right now, the simple answer to your question, I went around the boat, right? But the simple answer is like you don't have nefarious players like Alameda anymore. You still have like Jump, and you still have QCP, and you still have Genesis, but I think they're a little bit better than Alameda. Call them Alameda, and you're like there was like a problem with Solana for a while. Like, oh, Alameda holds all the coins, they're gonna dump on everybody, so all the market makers got scared and stopped market making for Solana protocols. Now that's kind of getting flushed out, and that's not the case. But you just have, I think it needed to happen in the credit cycle, and I think that you're going to have more better players in the space than like bad actors. Like essentially, Alameda just bought. I think he even said like, "Oh yeah, fuck you, we bought all the tokens, right? We bought all the tokens, and there's nothing for you, and we're here to make all the money, and screw you." And that's still the case a little bit, but maybe they're not as public about it. But I think you're going to see a lot less like, oh, Alameda holds all the coins of every Solana project, every Serum thing that you've ever heard of, that they owned all the tokens. That's going to go away, right? And that hopefully in VC gets split up a little bit. Hopefully, right? Does that answer your question a little bit? I talked a lot, but.
Yeah, I mean, there's like no right answer to it. It was just more of I was kind of seeing what your thoughts and opinions were on like, if you've seen anything from a market perspective, if you feel sometimes when you just staring at markets daily, right, you get this feeling of like something has changed, the market design has changed, the players have changed, order flow has changed, right? You don't always know why, but just kind of curious if you've kind of thought that there was a connection there.
No, there was nothing since November till now, right? November till lately until this last little pump. Like most people didn't expect like 16K to 20K, right? I mean, there was sure some Twitter folk or something that was saying something, but like majority people were like 11K only. Everybody was essentially offsides. And I think without a bad player like Alameda, especially on like the market making side, it feels a little bit easier, right? Like we're not getting front run by like a fucking penny because somebody's like a little bit faster than us, right? I'm not seeing that as much, but yeah, I just hope like we flushed out most of the bad actors, and a lot of funds, if they were good or bad, got flushed. And it's just the beginning of a new credit cycle. And we'll be up only again at some point. I don't think crypto's up only forever, up and to the right forever. Go look at the Japanese index, the Nikkei, right? It's just like been fucking sideways for 30 years, right? Markets can do anything depending on liquidity. And recently, crypto's been the beneficiary of USD liquidity, and especially at some point retail pump, right? Like 70K. I never even thought we would ever see 70K in my lifetime. When I was in at like $100, and that was late. I felt late at that point.
Thank you, sir.
All right, guys. I gotta wrap it up. I gotta host these 10 fucking people.
Yep. Appreciate your time, Marty. Everyone, appreciate you all for joining. We'll be doing these bi-weekly, so stay tuned. Join us in 2 weeks again on Wednesday. Enjoy the rest of your week. Later.
And more questions. We need some more questions, not just from one person. Bring some questions. It could be market. It could be crypto. It could be options. Whatever. I feel like I got a handle on most of those questions, but feel free to ask anything.
Yeah, crypto specific, Premia, option, whatever.
We're here.
All right, guys. Have a great week.
Peace out, fams. Later.